All right, there we go. Underway. So it's Monday. Happy Monday. Who's had a good day already? Anyone in here? Have fun with the markets yet? Guess not, huh? Tarek, you're in here talking about sailing? It's awesome. No trades yet, Joseph?
Yeah, I'm flat.
Flat, alrighty. Yeah, I have not looked at the markets yet. I looked at it for about 5 minutes earlier today and just put these levels up, adjusted the levels, but now I'm back. So let's see what we have. This is the 4-hour chart of the MES futures. And look at that. That was a low at some point last week and gapped down with all the news and everything and bounced from approximately that area. And another breakout through a previous level I had, which was, yeah, it's basically where that move started on Thursday. You can see it right there. Had the same move again today. Oh, man. So I'd say 2 opportunities for longs looking at it in hindsight. This is just the MES, though. If you zoom in, you probably find good opportunities on the smaller time frames at these levels. So you can see big moves began. I should have looked at this earlier. Looks like fun. Let's go to the M&Q and see what we have. Same idea. Gap down, bounced off was what was previous support on Thursday. And then it went through, I'm not even sure why I have this level here. This would probably make more sense if I had it here. You can see this consolidation zone right here, these few candles. Let's zoom in a bit. This consolidation zone and the breakout happened, so I would likely keep the level right there. Break and retest on this 4-hour chart would have been awesome. Would be holding this for the last 12 hours or so if you got into it. Where was I 12 hours ago? This looks like fun. And this is a Russell. Let's see, I put the level about there most likely. That was previous support. Turned into a bit of a resistance and then the breakout. This is cool. You can see the higher lows here. Just like that. 4-hour chart, ascending wedge, gap down, ascending wedge, breakout. I mean, this is a neat one. And yeah, you have that resistance that was placed last week. So pretty much hitting that target about now. This would have been fun too. Wow, lots of opportunities. I mean, all of these though are Eastern time, what, about 10 p.m., 11 p.m. For me, that's 6 a.m., 8 a.m. No big deal. Just wasn't here at the time. These are good, man. Wow. All right, let's look at the Dow Jones. Yeah, this one is just in this within this consolidation. I remember I put this level on earlier, never got back down there. Where's that from? I would probably put this over here. You can see that was support. Got into that. Turns out that's the top of that candle as well. And it's a bit of a chop zone. This area was support. Let's come back to it. It was resistance to begin with, but really, no room to the left. It spent a few 4-hour candles already in this zone, so I don't want to touch it here. Stay away from this. Room to the left. Very, very important. Yes, this one doesn't look great. In oil, yeah, a little messy, isn't it? That's just the top of that consolidation. And down here, let's see. You can see where these candles right here, it's resistance, false breakout, and resistance again very precisely. So that makes sense. Just hasn't come down there yet. But a nice little gap up, the price of oil going up with now the Trump blocking the Strait of Hormuz. Isn't that something? Wasn't that that social media thing last week where he was abusing the Iranians for blocking it? Open it up and all those words. And now he's blocking it. So it's a fair bit of entertainment, isn't it? So anyways, gap up and it hasn't been useful yet, the price at least. All right, gold. Wow, look at that. Gap down in a big candle. And then it's just been consolidating. So this is not an area I would play with it. Looking at it now, the level at the bottom of that consolidation, yeah, approximately there. Yeah, this makes sense. So these levels make sense. I would just wait for a breakout, up or down. Most likely up would happen because of this big hammer down here. But again, not useful right now. This is when you don't play with it. Silver, I barely trade silver these days. Well, I haven't found a way to do it effectively. That's interesting. Again, just looking at the candles, ignoring these lines, it's in a bit of a chop zone. You know, the fun breakout would be up here because you have this big hammer after the gap down. And lots of buyers lower down, and then if the buyers continue upwards, this is just a good little breakout. If all that happens, it could happen today, it could happen in a few days. This is a 4-hour chart, so you know the levels could stay here all week. This is the key level I'm interested in, though, 75. Let's see if it breaks through there to the upside. It would make sense. And Bitcoin futures. Who here has been trading Bitcoin? Look at that, that thing went up. So we had this zone overnight, and then the breakout. That's fun. Again, this is exactly the strategy I'm looking for, guys. It's not very complicated. You have the consolidation. You can basically mark the high and low of this massive candle. Then it breaks out. Then the retest, and off it goes. That's the one I'm looking for on silver if that happens later this week. So there you go. Not too complicated. Let's zoom into the tick charts on this and have a look. You can see the breakout and the retest. Where is it? Here we go. This is the 100 tick chart. So here's your big old consolidation zone. When it first broke out, I always avoid trying to catch these breakouts because they often fail. Wait for the retest. This one came back, and you could identify this as a retest if you're finding the activity going upwards. And what's interesting is when it does reverse down here, it comes down and goes back up. It does it off a very interesting zone. You can see this was previous resistance, right? Breakout, and turns it into support. So you could see this as a retest. If you're able to read the activity down here and catch that entry, that would make sense. So if I'm trying to read this, I'm looking for big sellers, and then the price goes up. We have big sellers here, but it did go down a bit more. So you don't have the anomaly I look for, where I want to see a lot of selling, right? More selling than buying, and the price reverses goes up, which is an anomaly which you don't see here. So that would disqualify the entry in this area. And later on, it comes back in. Over here, you see it. Lots of selling, especially here at the bottom. Starts to go up. So when this candle closes here, you see the selling. It starts to go up. You might be interested, or even on the next one. And even on this one, as the price goes up. Either way, if you took an entry here, probably end up stopping out. And then here, you know, this is interesting. It's not exactly the anomaly. It's a bit of a bending the rules sort of thing. You can see the big sellers here and the price goes up. If you like working with that, I wouldn't take it. And then it goes. So overall, I don't see the ideal entry for the way I would trade. And then let's see, you have this minor consolidation resistance area, the break and retest, maybe in this zone, maybe. These are all maybes, though, not great setups. So you can see I'm looking for the entry on these smaller charts, on the tick charts. But the bigger picture, the whole setup is here on this 4-hour chart, which the setup is pretty neat. It's just that I don't see the real neat entry here. I don't think I would have traded this if I was looking at it in real time. There we go. Fun. So nobody got any of this action today. We've got lots of activity here on the MES and MNQ. This would have been fun. There were 2 trades on this. I wasn't here at all. Hey guys, you know what to do? What you would do if you missed the trade you're looking for? You come and you see it later. What happens next? What's very typical? What's that reaction that we all tend to succumb to every once in a while? Anyone know that one? Well, I've seen you all do it, including me. FOMO. Yes, that's it. Thanks. FOMO and chasing it. So please don't do that. I'm having that right now. These two massive opportunities in about a 16-hour time frame. And wasn't here to look at it in real time, so no point chasing it. What are you going to enter up here? No way. There's no long, no short, no setup up here. If you're long from down here, all right, that would be the target zone anyway. But yeah, you don't get into this. Not now. So be careful with FOMO, guys. That's one thing I got to say. With the futures market open 23 hours and you having access to it all the time, you're going to see this a lot. While you were sleeping, the setup happened and it went. Doesn't mean you show up after you wake up and start chasing it around. That's not what you want to do. Just let it go. The market is incredibly abundant. Find another setup in the next few hours or tomorrow, whatever. So I would keep, I don't know if that's a real decent level to have. This is obviously consolidation zone. So I would put, oh, that makes sense. You see where these candles hit the same spot? And then these end up being false breakouts, which at the moment is also hitting that same spot. So this is an interesting zone. Let's see if we get a consolidation and then a breakout upwards too. Or on the other side, perhaps a move down, but you do have this kind of chop zone, so I'd be careful going short. So anyways, an area to keep an eye on if the price gets back up there. Probably will. Anyways, yeah. Joseph, no trades. Tarek got some of the action on the wrong side. Oh man. Tarek, you're going short every day. What's wrong with you, man? Did you go short gold as well? Oh no. Yeah, you got it. FOMO. Tony, yep, jumping into a trade that is not your setup. That's right. See, that's the problem with it. You know, we're just talking about FOMO. It's the abundance mindset or the scarcity mindset. FOMO comes from the scarcity mindset, where you believe that your setup is there, or when it's there, you must take it, and that's true. But the scarcity mindset comes from if you miss your setup, you believe that that was it. You should have had that because it's not going to come around again. Now, that's all scarcity thinking. You are here in the financial markets. This is a massive environment of abundance. There's trillions of dollars sloshing around every second. There is no scarcity here, you know. So you got to rationalize it and start reinforcing that abundance mindset. So what if you weren't there and went without you? I can probably show you a million tickers that have made massive moves today and none of us knew about it. You can have FOMO and scarcity on all that stuff. Doesn't make sense. So focusing on the abundance mindset. You'll get probably 2 or 3 more setups today and tomorrow and the next day, whatever. Let it be. Really let it be. Really be careful about these sorts of things. And again, trading is technically it's a joke. It's so easy. It's the psychology and the mindset stuff that determines your success or failure. So please pay attention over there. That's the important stuff. Don't need to make trading complicated. And of course, the problem is when you start losing trades and you think, then you don't know what you're doing, then you jump into another indicator or another subscription or another whatever. You know, that's the wrong direction. That's a unending negative loop, negative spiral. You're never going to find success doing that. You got to upgrade your thinking and your psychology and your abundance mindset and all those sorts of things. Then most things won't bother you. You'll be quite all right. I learned that the hard way, just like a lot of you in this room have. A lot of people have learned that, so we all know what to do, right? We got here. Saber, you got action on MES. Nice, there you go. All longs. Hamza, you had a level and was fast asleep. That's awesome. You were fast asleep. Yeah. Well, I was just in the cinema. I just got back like 30 minutes ago. I took my kids to see the Mario movie. It was fun. I enjoyed it. I grew up playing with those Mario video games back in the 80s. So I missed the trade though doing that. Whatever. There you go. There's abundance. I'd rather be in the cinema than doing this. I could have probably pulled out the phone in the cinema and taken the trade. But one thing at a time. I don't like multitasking. Doesn't make sense. You got your money. You were waiting for the retest at 2 a.m. and then left the desk. Yeah, insane. Tarek short MGC now. Oh boy. All right. Let's look at your short. What are you doing here? Mark, you've been away. Welcome back. Seeking trapped participants on the footprint using their pain, stopping out as fuel to gas. Not necessarily, Mark. That's more the false breakout idea. Zach talks about that a fair bit. It's not exactly how I think about it. I'll get into the details of kind of what I'm looking for now. Let's look at this real quick. Tarek's in the short here on gold. Oh well, cool. Scalping style, I'm sure. See that? Just looking at this candle here, this is a large volume right here, something unusual. So if you're short, I would perhaps target that zone, at least de-risk it there. But anyways, overall, just looking at this chart, I would see, where's that level from? Where did we put that from? Oh yeah, this was resistance, breakout, retest, bounce off, and support again. So it's interesting. If you like playing ranges, I would see if there is a long down here. Again, fractal patterns will just tell you that this is support, bounces off. So when it comes down here, you zoom into it and see if you find a setup here. I don't like trading inside ranges. It's not really the way I can rely on my trading. But let's see. So this is that footprint chart I like to look at. It's the 100 tick for now. Came down, huge double bottom, a decent one. The second low is not higher, but it's there. So if you like trusting this, you can think of it this way as a reversal. What I like to do is identify more than just a double bottom. I want to identify a consolidation, which could overlap with a double bottom. Once a consolidation, then the breakout, and then the retest. So if this looks like your double bottom here, and the price gets back up here, and then you have the breakout. Then when it comes back and bounces off of that resistance during the double bottom, that would be the entry, that break and retest. Yeah, that would make sense. So there you go, Mark. That's how I would do it. Basically, it's nothing more than a breakout after a consolidation and then the retest of that breakout. The retest is where I want to enter. I don't really bother with the trap buyers and sellers and all that stuff, even though it can easily overlap, right? Depends on what words you like to use, really. In the end, it's all the same. But this double bottom has obviously not done that whole retest breakout thing that I like. But you can see here again, it's putting in resistance up here, right? And you can identify this as a consolidation. If it breaks out, retest up in this area. Was this 4733? That's a potential. But again, I don't like trading inside the range, like I told you before. It's inside of this area. I don't like it. It's not my style. I'd rather wait for the bigger breakout up here. If it gets there, consolidation, breakout, retest, that's the big one. But again, you can see there's plenty of moves. What I'm looking at is a 4-hour chart here. This is a 4-hour chart. It's massive. Within each candle, you can find massive moves. Like this one, if you identified the reversal going down, would have been all right. So let's say you identify this level as resistance. So when the price gets up there, using fractal patterns, you would think about resistance. So you're looking for that, basically that reversal from going down. And the way I want to do it is consolidation, leading to a breakout, leading to a retest, and go. Let's see, on this particular chart, I would identify, probably down here. This is support. You can see it. And you have your breakout. Didn't quite come in to retest it. I did here, but not ideal. It went. So I doubt I would be entering this one if I had the idea for it up here. So that's interesting. You know what? Let's look at the MES where I was telling you these setups look interesting. Like down here, let's look at this level and then this level. See what the footprint chart or the tick chart look like. Where is it? There we go. I need a 1,000 tick chart on these because they move faster. The MES moves a fair bit faster. All right, so this was that setup earlier. Wow, look at that fun. This would have been pretty much after the market opened, Sunday night Eastern, about 6 p.m. the market opens. Started to really move around 7 p.m. You had an eye for this. I don't see anything that I could trade. I don't see a pattern. I don't see anything. It's very tricky. It opened here and it's been choppy and just break down a bit and then go. I don't see a way I would enter this. And you can look at it this way if you want. See this as a consolidation zone and the breakout and retest and go. But this is really just, you have to squint your eyes to look at this. It's not what I want to do. Well, back to this level. First time it was a breakout. This is why I don't chase breakouts. Don't trade breakouts at all. You have the consolidation. You have the breakout, but it failed, right? This is why I don't trade breakouts, because this happens way too often. So let the breakout be genuine and then catch a retest. So let's see. Yeah, this time it broke out pretty soon after the New York opened. If you identify this as a bottom and go, you could have maybe got that. But again, I don't see the setup. I don't see the price pattern. That makes sense. Let's go to the smaller chart. Maybe we'll find it. Same idea, same picture, same patterns. See, it's coming down and just making these bottoms, right? But bottoms from where? I want to see a consolidation that it breaks out of, then bounces off. So it's funny, on the 4-hour chart, the picture looks good. But zooming into these charts where I do the executions, these tick charts, I don't see the setup. I don't see where I would enter this sort of thing. So, okay, no FOMO. The trade was never there. It's fun. Even though it went long, it was not there for the way I do it. Over here, maybe. This would be the one that if you look at this area, you really zoom into it. No, I don't see it. I see higher highs and higher lows. I don't see a rectangular consolidation or something. Nothing there. So no, nothing to look at. Anyways, let's go to where it is now. Up at the top. Yeah, that's that resistance level we found. And choppy. No setup. Let's wait for it. It's funny when you have these big gaps and then big moves before the New York session. Typically, you want to be careful in the New York session because it's already made big moves, you know. Again, that's just out of instinct and experience. I can't quantify that. I can see how a lot of people would trade this. I mean, if you have the New York open, that's the high, and you can see the break and retest. This happened about 20 minutes after the open, something like that. If you like 15-minute ORBs, you probably have a good one there, if you like doing that. But again, you're entering up here, which to me is literally between my bigger picture levels. So it's not something I do. ORBs are no fun for me. Anyways, that's that. What else you guys want to talk about? What's on your minds? A whole new trading week. Nobody blew up yet. That's a good thing. Nobody blew up that I know of. Plenty of news coming out of the weekend into the markets. So lots of volatility, lots of opportunity for day traders. Those of you who identify yourselves as day traders. And scalpers and all that fun. Let's go back to the 4-hour chart. This is the chart that makes more sense to me than most things. So again, last week I started looking at the 4-hour chart for the first time in any serious way. So I've always been looking at the 30-minute chart. What I figured though the last few weeks is I'm finding way too many setups on the 30-minute chart. And the only reason is that I'm trading the futures market. When I was just trading the New York session, the 30-minute chart makes a lot of sense. But with the futures market, you have a lot bigger time frame. You have a 23-hour market. So it only makes sense to go to a bigger time frame. And so since last week, I've been looking at the 4-hour chart. So far, it's all good and well. Makes perfect sense. And there's not much to look at, not a lot of work to do. Mostly I just look at it on the phone. I only really come to the computer when I'm here talking to you guys. And what I'm looking for is nothing more than consolidations. So you can see right here, consolidation, then you get the breakout. Over here, you had a consolidation. Turns out it was a gap down. Yeah, this area, big consolidation, probably put the levels there, and then if it came back for a retest, you have the long over there. So just trying to identify areas of consolidation, which then lead to a breakout, which then leads to a retest of the breakout, which I try to execute on the tick charts, on the footprint tick charts. And that's it. I'm not really bothered about zooming too far to the left and looking way back there. I don't find it necessary. This is a 4-hour chart. This is huge. It's a very, very large time frame. So it's easy enough. Just look at the previous few days activity, and it's not difficult to identify consolidations and moves. Consolidation to a breakout, another consolidation broke to the downside. Now it's back up in the consolidation zone. See what happens next. So that's basically it. Not difficult to do. The only thing is patience, and of course FOMO. Because like we said earlier, it is a 23-hour market, and you're not looking at it all the time. So moves will happen when you're asleep. Doesn't mean you come in and just jump in just because you missed it 4 hours ago. That would make no sense. That's how you blow up. And with the futures market, we all know about leverage. Plenty of leverage, right? So please don't blow up. Don't go chasing stuff. You will blow up. Let's look at the MNQ. I feel like there was something there we saw earlier, right? Yeah, look at that. Consolidation to that breakout made sense. Just leave the levels on. This would work as well. You guys know what this is called? Well, popularly what it's known. If you just look at, I'm trying to get these 3 candles in the view. Right there. Actually, it should be only 2 candles. All right, let's look at these 2 candles. You have one very bullish candle, and then a small candle just kind of testing the high of the previous big bullish candle. And if the next candle does break out, right, that's when you're looking for that entry on the breakout. Do you know what this is called, anyone? This kind of candlestick pattern? Come on, we've all seen it 1,000 times. 3-bar play, Zach got it. Yes, thank you, Zach. ABC Tony, yeah, it's the same thing, man. Call it a bull flag if you like. I don't know. It's the same thing. It's all the same. But 3-bar play seems to be the popular term running around. So you basically can put on the high, but if you see, you have the high of this big bullish candle, right? Right over there. Let's just put it on right there. Now, if the next candle just goes, you don't chase it. Just leave it. It's already in a trend. But if the next candle consolidates and it tests the high, it's consolidating just below that high. Now you're waiting for that breakout. Whenever that next breakout happens. So on the very next candle, 3rd candle, therefore 3-bar play, that breakout happens. Go into a smaller time frame, you probably find a break and retest, and you can do all that. And then off you go. So this makes sense if you like it. Again, 3-bar plays is not something I typically like to do. I've done it before on 5-minute charts and 1-minute charts. I like bigger picture setups. This one would have worked out quite all right. Probably take 1 or 2 stop. I was trying to get in this one, and that would have worked. But it's not something I like to do. I like to look at consolidations like this. There's multiple candles right here. You can see it's really defining the high and low, and really the high of the consolidation. I'm probably put in this zone, just kind of in this area. These candles got really compressed, right? Then you get the big one. But 3-bar plays exist if you like such things. It's all there. See this area? Small candles overlapping each other. That's basically a consolidation. That's what I'm looking for. And then you get something after that. So anyway, does anyone see any setups anywhere right now? We can look at it together if you like. I don't see anything, at least here in the future stuff that I look at. Nothing of interest. Well, let's look at this Nasdaq on the charts to see what it's doing. The chart. So this is a 100 pick, which is really fast. Let's go to the 1,000 pick. 1,000 pick chart. There we go. 3-bar play stuff. So you have your levels, breakout, really choppy and messy. But this is something I like to see. When you see this consolidation here and the break and retest, it did happen here. We may have gotten a stop out of break even, but then it goes back up again. You can see where again it retests this whole consolidation zone. I think it's a very tricky price action to get involved here after taking the break even over here. But it's there for those of you who like it. Look at this one. This is another one. If you see the high here, the opening high, drop from there and then comes back out right to the high over there, and it breaks out at, again, about 20 minutes after the open. There's your breakout. If you like the high of day break, but basically an ORB setup. break and retest of the previous high of the 5-day, and off you go. Again, all this is day trading stuff, scalping stuff. All of it works on 1-minute charts if you're good at scalping. If you like such things, put on massive size, massive leverage. You need a larger account, larger capital to really make this efficient and effective. Unless you're going with options, which has its own problems. But again, it's all here. Day trading. Right? You're only really interested in price action after the open. Not something I do anymore. I'm interested in these bigger levels. But since all that, I don't see much at the moment. If you were playing with this in the last half hour, you'd probably get stuck a lot. Yeah, this is very tricky. I wouldn't be playing with this. We got here, Zach. Snooze fest, yeah. Yes, snooze today. So after the moves happened, the big picture moves happened basically when the market opened at 6 p.m. Sunday Eastern. And don't bother too much after that. It's just like, think about human beings and sprinting. You sprint, then you gotta relax, and you can sprint again. This is the relaxing period right now. The sprint happened before the New York session. So I don't believe today is the day to catch big moves in the New York session. I think it was there, but way, way earlier, right? Way earlier. Sunday night. Let's see. It could wake up again later. What do we got, Carl? How do you set those levels? Levels again? Sure. All right. Levels that I'm looking at these days are here on a 4-hour chart. And really don't bother too much with the footprint. I'm just looking at candlesticks. And what I'm identifying, or what I'm really looking for, are consolidations. So if you want to look at this right here, you can see it. It was a big move and then a consolidation and then a move again. You can even see an ascending wedge in this area. This line here is just from that previous consolidation, the low as well. It's right there. But what I'm interested in is the consolidation that leads to a breakout, because there's only really two phases in the market. It either goes sideways or it goes directional. And it always flip-flops, right? It goes directional after it breaks out of a consolidation. Breakout, then the retest is typically the start of a new trend. So I'm trying to catch the retest, not just the breakout. So that's why I want to identify the consolidation, then identify the breakout, then wait for the retest and go. Over here, like I was saying earlier, this would be a 3-bar play, but there's nothing I would trade. I don't trade 3-bar plays. So let's see what we can find. Here's another one. This whole area is a bit of a messy consolidation, but you can see where there's an obvious high, and then again, and there's your breakout on a 4-hour chart. If you're able to catch the retest on it, once you see the breakout happening on the 4-hour, you can zoom into whatever you like. I like the tick charts, and comes along from that area. So that's why that level's there. Again, in this area, you can see it did a big move, and then the consolidation's all here. I just put the levels here. Something like this. You can see the zone just always going, and then the breakout happens. Even here, small consolidation, and then the move. So that's it. Just on a 4-hour chart, which is large enough where I don't need to zoom or scroll to the left too far out. It works. Nice and simple. But if you like fractal patterns, here, support, and then it's support again. So that's there. Yeah. Fractal patterns are always fun. They still work very, very well. But that's it. Just identifying consolidations on a 4-hour chart, Carl. That's all I'm doing. And then wait for it. Either it works out or it doesn't. And that's it. What's going on with the gold? That we were looking at this earlier. Yeah, it's just sitting there. Again, you can see the consolidation zone right about here. I like to wait for a breakout. I don't want to trade inside of the consolidation. It's too messy. You can put it here as well. Look at this area. There's a consolidation zone, and then the breakout happened. Even a good retest later on, way later, like 20 hours later. Back to the top. There you go. Same thing here. Look at this big consolidation with higher lows on this one. Take a look at this. This line's in the right place. Higher lows, something like that. Something like that. You can see the higher lows on this one with the flat top, and then the breakout happens. So when it starts to break out here on a 4-hour chart, that's when you can go into a smaller time frame, catch the retest, and off you go. And for a target, just look to the left, find the most recent resistance. There it is. So you got long perhaps in this area, and that's your target. Today, I think I got this one. I got one here. Maybe it was this one on Friday. I got long from here, I think, and got this. I don't know. One of the Friday or Thursday. Anyways, yeah. No worries, Carl. I can repeat. That's okay. Repetition is penetration, right? Freaking big skulls that we all got here. Everyone here's got a thick head. You know why I know that? You want to know why? I think all of you got thick skulls. Because you're resilient enough to reject pop culture and think about day trading. And now you're thinking even bigger about trading. That's good. You're thick. Thick skin, if you want to say it that way. You know, all the propaganda, all the propaganda that comes through education, right? We all know about this stuff. And everyone in here is in here because they rejected, all of you rejected all that. Whether you were in it for a while or not, in the end you're here. But for people who are like this, who are, call it resilient, stubborn, you know, I'm very stubborn, I know it. It does take a fair bit of repetition to, you know, to learn something, to break a belief system and build a new one. So yeah, trading firstly attracts this kind of people. Well, the ones who don't blow up in the first 6 months, the guys who are left are resilient and stubborn people. And then now to help stubborn people figure out trading is you got to be even more stubborn than them. It's outrageous, isn't it? The whole thing. But I love it. I love it. It's perfect. No, I don't like people who are just starting out in trading. I don't deal with them because mostly they're just here to get rich quick and they don't get it. They just don't get it. They're all very soft-skinned. You know, you prick them and they start screaming. Forget it. The people who've been around 6 months or 1 year and realize that it's not what you were sold. You know, get rich quick and AI setups and magic indicators and signals. It's none of that. These are the quality people, I call it, stubborn people, resilient people, the people I want to be around when I'm trading. You know, and honestly, the higher quality people I want to keep in my life. And that's you guys. It's perfect. It's what it takes over here. It's what it takes to make it in this business, especially in this business. Because you gotta learn to take your hits, right? And then still stay in the game. And then learn from your mistakes, which is hard. That's why we need to be in a group of stubborn people as well, so we can really kick each other's asses when we need to. If that makes sense. So, all fun. Always good fun. There we go. Yeah, Carl, there you go. Based on current consolidation of price action. At the moment, not any predetermined setting. That's right, yeah, no predetermined settings for me. I'm just looking at current consolidations, and 4 hours is big enough where you can trust it. Typically, to get a consolidation on a 4-hour chart, something like this, it's a whole day's worth of price action. Sometimes a few days worth, like over here. Look at this one. This was almost a week's worth of price action. And then the breakout basically marked this week's high. Something like that. So that's how it works. Good. All you thick-skulled people. There you go. Fun stuff, huh? Yeah, you guys have seen me trade for the last, I don't know, when did I start? I really got involved in the markets in 2017, almost 10 years now. And I've traded so many different strategies over the years, so many different instruments, so many different time frames. You know, day trading, and then option selling, and swing trading, and then went into the 0DTE option stuff, fractal bands. I mean, there's like 20 strategies in my head. But every time you see some activity on the market in the price action, what I struggle with is really when I see it, I'm like, oh yeah, that's that strategy that I used 5 years ago. I remember that. It's right here. It's happening right now. I could just pull it right out of my pocket and trade it right now. But that's not right. That's a tough one. That's for me, that's tough. That's where FOMO comes in. So FOMO is a little bit different for me. It's not just chase it. It's I know there's a strategy where I can catch every one of these longs and shorts that you see on the screen right now. Every single one of them, because I have done this in the past. But there's a specific reason I don't trade that strategy anymore, and I only trade a specific thing I'm doing right now because I'm trying to achieve a specific goal. I'm trying to grow my trading from what it was a year ago into the next level. So I can't just go and indulge those earlier strategies just because a candlestick seems to be moving that way right now, right? So just to be able to do that, you got to be incredibly stubborn with yourself already and resilient and say, no, this is my rule. This is what I choose to do. Just because it's moving doesn't mean I'm going to not do it or do something else. Then you just get lost, especially if you take a losing trade on it. Then you get lost completely. So a very simple saying is, once you've moved on from your past, really move on from your past. Don't go looking back. Stay forward. No point looking back once you've made a decision. And then you can actually move forward and give yourself that genuine opportunity to grow and get bigger and better. Otherwise, you're just self-indulgent, which is one of those people, like we said, you prick them when they start crying. Yeah, you're one of those. No point doing it. So, yeah, that's one thing. Something that comes around once you've kind of spent some time with trading. You gotta be very, very aware of all these sorts of things. I mean, I could trade this long and short within the range. I've done it, but it's not going to help me achieve the goals I'm trying to achieve these days, right? It would have worked for me 3 years ago, fine, not today. What do you got here, Anthony? I was saying with my fiance, I may not be stubborn, but I am extremely stubborn. I love it. Tell that to your fiance. Oh my God. Well, she's going to have to be stubborn too to put up with you, man. What are the parallels between the mental part of applying each strategy? The mental part, the parallels between, okay. Well, the commonalities between all the strategies that I've done and developed is RVR. That's at the core centerpiece of every strategy, massive RVR. Risk $1, make $5. Risk $1, make $10. You want massive asymmetry. So if that's not there, I don't care what the strategy is. I don't care how perfect the setup is. It's not worth taking. So I've built that into my mindset, into my psyche. That's incredibly important. That's what has kept me alive in this game and profitable for so long. But then, like I said again, the real tricky part on the other side, well, another thing is the pace of each strategy. You have 1 minute ORBs, for example. You have 1 minute reversals. You have trades that I've taken within the first 20 seconds of the New York Open. I used to trade that way for quite some time as well. And if you look at what I'm looking at now, which is a 4-hour chart, it's kind of ridiculous. It's the opposite, right? So what we're talking about is the pace. You're interacting with a different pace of the market, but really it's nothing more than a reflection of the pace at which you function in your head. So I've definitely intentionally slowed down the pace at which I function, so I can be more purposeful and meaningful with what I do, which is, again, just a reflection of how I conduct myself in the world, and it comes right into trading. So I don't have to be a different person when I come to trading and get all hyperactive. I don't have to. I just be myself. I choose to function at this pace. It's actually a better life. That's why I've done this way. It works beautifully. So really, your trading style, put it this way, your trading style should be a reflection of your personality. And I've done webinars and webinars and webinars about this, and it's all over the courses. You guys can take a look as well. Because in the end, you don't want to fight yourself when you're trading. You want to be able to manage your risk and manage your emotions when you're trading. If you're fighting yourself while you're looking at candles and trying to put on risk, you're going to blow up. I promise you're going to blow up. So when you're building out strategies or developing your style of trading, you got to be aware of these things. And it evolves. It should evolve, because as a human being, you're always growing and evolving, right? Therefore, if you believe that your trading strategy or trading style should be a reflection of your personality, then your trading style should evolve. I mean, if you're for 10 years, you're still trading the same strategy, but kind of reflects on what's going on in your world, you're probably stagnating as a human being, most likely, right? And then you're just selling courses online, doing all that stupid stuff. So, that's how I see these things. Hope that helps answer your question. But that's all the mental part of it. That's all on the mental side. And of course, your goals evolve too. That's once you achieve a certain level of results with your trading. At least for me, I always want to see, okay, what's next? How much further can I take this? Or what do I have to change to achieve bigger, better results? And then I started evaluating that and researching that. So far, that landed me here in the futures market from the options market last year. So these are all the things that are going in my head. As you can see, there's not much about candles and stuff. You know, it's all up in here more than anything else. That's the important stuff. Very, very important. Yeah, Sonny, you're welcome. You got look at MCL on the chart. Also, would you consider its current state as a genuine breakout or retest short from today's range? All right, Tony, MCL. Yeah, Zach, you're welcome. No worries. I feel like my whole existence has become nothing more than just self-awareness, just always focusing on just being aware of myself. I'm not bothered about anything else. Just always evaluating myself. Where am I today? What am I doing? Am I at my best state? Am I not? Am I being self-destructive? Am I being productive? What am I doing? It's so funny. It's like instinctively, I'm always just trying to be aware of myself. It's a good thing. I like it. Living life this way is great. So much better than all the other garbage previously. Huh. There you go, Tony. Yeah. On the 4 hour, the answer is no. Yeah. Yeah. All right. This is a good little piece of price action to study, I think. You're looking at 30-minute. All right. Well, you know, it doesn't matter what time frame you pick. Really doesn't matter. They're just candlesticks and the patterns are the same. So clever. You can evaluate it the same way. If you look at this thing gapped up and it made this large candle, right? So you can literally identify a breakout of this large candle. Call it the futures market or whatever, if you like, or whatever. In this case, false breakout so far. But that's only evaluating this. Right now, if we just zoom out just a touch, just a little touch, let's get some perspective. Big move down, great big consolidation, and then the gap up was truly nothing more than the breakout of this consolidation area. Right? And let's put where was it? You can see where it hit here and here. That makes sense. And this was a false breakout. So when you have the breakout with a gap, there's your retest of that breakout. That consolidation, breakout, retest, there's your long in that area. When did I see this earlier? Oh man, there's another one I didn't look at. I'm gonna blame you, Tony. You didn't tell me about this one like 30 minutes ago. Probably kind of long here. Oh man. Yeah, this level makes sense firstly because that's the high of that candle, which obviously it's the open of that candle, which you can see its resistance again right about in that zone. If you want to just bring it right there, no big deal, right? That makes sense. Multiple times it's been rejecting off of this area. It's been very interesting. So break and retest. So it's a long down here. Let's see what the tick chart looks like. If there was an opportunity, you can see just looking at it this way. This is a 1,000 tick chart coming down. Perfect double bottom, right? This is what you want to see in the double bottom. You want to see it came from a downtrend and made a second bottom higher than the first. A nice arch, nice gap space in the middle of that double bottom, and you have your opportunity. Pretty cool. Oh man. When I was trading, doing the naked trading stuff with fractal patterns, this was an ideal setup. I would have at the time, I would have waited for the second bottom. Here's your first bullish candle in the second bottom, this one. Then the new high is the entry. So there, the next candle give you new high right there is the long with the stop below. You're going for the next level up, and 3 to 1 is the minimum RVR target. In this case, it would have been more. It would have been, if it gets up there, probably 5 to 1. There you go. Simple way to trade, not too troublesome. But these days, I don't really do that. I wait for the consolidation and then the break and retest. And knowing the oil market, it's not very fast moving, so I can go into a smaller tick chart, like 100 tick. And let's see what it looked like at this level. So there we go. We're in the same zone. The first time it got to this zone, I see this consolidation. All right, there's your resistance. The breakout got really choppy. Look at that breakout zone. So no, can't trust it. So let that one go. Any other opportunities? Well, here perhaps you could look at it. It's right about in that zone. This is the second bottom of that double bottom that we saw on a 1,000 tick chart. This might be more interesting. See this consolidation here? Get the breakout. Did it ever come to retest down here? Let's see. So the breakout looks decent there. No, has not come to retest, and off it goes. So on this chart, no entry. And the 10-tick chart. Last week I did take some trades on this 10-tick chart. That was interesting, but it was more in the London session than anything else, just because all the market's slow enough. Well, you can hardly see the candles on this one. See a bit of a consolidation here, but this is just two 10-tick candles. It's hard to trust. I want to see a big one. Hardly see anything. There you go. That makes some sense. There's a consolidation. Got the breakout. Wait for the retest. Did it happen? Nah, this thing just went. Forget it. And later it did come back. Here we go. This makes more sense. Look at that. Now you have this consolidation. You have the obvious high. You have the break and the retest. This area would have been an interesting entry on a 10-tick chart. So if I was able to find the entry reading the footprint activity in real time, I'd probably enter here, I think, most likely. Yeah, here with the stop below. So enter about 100.9, stop is 100.7, about that 20-cent stop. And just zoom it out and leave it to run. Yeah, it took 2 or 3 of these trades last week, I think. Yeah, that's how I would trade this. The entry is right here. You can see the consolidation, break, and retest. You can see how tiny it is right on this chart. And then you target these big levels, and you leave it on for how many ever hours it needs to get there. And then you have the 10 and 20-hour trades. And this is the way I've been trading for the last 2 months or so. So if I did get that entry, probably target that area. Didn't. It's only halfway there. If I did get that entry, and once it got up to this previous resistance, see the entry is in this area, resistance is here. So once it got up into this zone, I'd bring my stop to break even. That's it. No risk. Just let it sit. Let it brew. Because that is resistance. And if it rejects again from there, no point having the risk on. Just leave it at break even and the target's up there. You can put on 3 or 4 or 5 trades like this. Just leave them. Some of them work, some of them don't. Mostly you're at break even on all of these. And sometimes they don't get to the target, but the market's closed, so you take it off wherever it is, 3R, 5R, whatever. So there you go. Fun. And there it is. It all started on this 4-hour chart. All about it, right here. Just that consolidation. Your breakout happened when the market was closed, and your bounce off right there. And that's something. Don't even really need footprints, I was thinking about this last week. I'm using these footprint charts. They're useful. They're good. I'm getting entries. But with the tick charts, I can really zoom into like a 10-tick chart sometimes. At that point, I'm hardly reading the footprints. It's a bit too much. But hey, try it out. I have it here, so I'll use it whenever I want to. See, if I was long down here, the target up here, that's a bit aggressive. I think I would more likely keep the target in this zone. You can see where sellers were in the same place across these 2 candles, about 104.50. I think 104.50 would make a decent target for a long from down here if you're in it, rather than going all the way up. I'd probably just do that.
Avi, what are the tick charts again? How does that work again?
Yeah, these tick charts right here, this is a 10-tick chart. So a candle closes every time there are 10 transactions. So let's zoom into it.
Oh, that's right. That's right. Okay.
Yeah. So let's see. Every time it ticks up and down 10 times, it closes. So it's not based on. Yeah. So this is pretty slow, even with a 10-tick, which is considered a very small tick chart. It's not very fast at all in the oil market. But let's look at something else that we know is faster, like the NASDAQ. And you'll see that it's a lot faster. Let's get into it. Here we go. 10-tick chart on the MNQ. And you see how fast these transactions happen. It's a very active market. Yeah, try trading this, you lose your mind.
Oh, wow. That's crazy.
You can. I mean, it's a bit messy. It's really messy. But I mean, you can pick up patterns. If you're, a little too hyperactive in your head, you can do this.
That would make me insane.
Yeah. Yeah. So that's the thing. I'm open-minded to using these tick charts based on the pace of the market. If I find the 10 tick is too fast, I'll just go to the 100 and then to the 1,000 to a point where it's at a pace where I can read it. And then, it's functioning. I'm functioning at the same pace as the tick chart. So I'm aligning the market with my mindset or the pace I like to function. But, it's different. Sometimes I do trade the 10 tick chart on the MNQ, but overnight, typically when it's really slow, I can pick up patterns on that. But right now, even the 100 tick, I think it's just unnecessarily fast.
So is that what you do? Like you look at, but you actually make your trade on, say, 100 or 1,000 tick chart or something like that?
Yeah, the executions, I do it on these tick charts, and which tick chart I use, I'm open-minded to it, So for
Okay.
now, if I was looking at the MNQ right here, there's no way I would go smaller than this 1,000 tick chart. This is fast enough. This is plenty. Get all the insight I need from this. Don't need to go into the 100 or the 10. But going into something like the oil market right now, like we were just looking at, the 10 tick chart is probably okay. You can probably just use that, find a consolidation.
Yeah.
Yeah, just because that market is functioning a lot at a slower pace than this market.
Copy that. Thank you.
Yeah, sure. Fun tick charts. Yeah, again, with these footprint charts, guys, the 80-20 thinking is, reading footprint charts does take a fair bit more effort than just reading candle patterns, right? So I'm wondering, is it worth even looking at it? Is it giving me a lot more insight? I've been able to get these massive trades recently, 20-yard kind of trades. So far it's okay, but if really once you start zooming into these tick charts, I'm not sure I even need these footprint charts. But anyways, these are the questions in my mind. I'll slowly answer them as needed. Not really a big deal. Everything here is available anyway. So what do you got here? Tony, that's why it looks way different than any time frame candle pattern. Look at the price, yeah. Yeah, Tony. It is different. It's a tick chart. But again, just like candle time charts, looking at candle tick charts, the smaller you go, the more likely you're gonna get false signals, right? And like a lot of noise on the 1 minute chart. A lot of people find the 5 minute chart noisy as well. You want to be careful. And if you find it noisy, that means you're not functioning at that pace. It's the candlestick you've got in front of you is too fast for the pace at which you naturally function, your frequency. So zoom out, go into something bigger. So that's what I'm doing with tick charts. I only go into the tick chart that I can read easily without straining my eyes or getting too hyperactive or anything like that. Like right now, this 1,000 tick chart, no big deal. I can read this, right? So be open-minded to that. There is no such thing as you got to use the 1 minute chart and trade ORBs, and that's all rubbish. You got to trade in a way where you're not fighting yourself. You got to function at your natural frequency and align everything on your screen at your frequency. And then trading's fun. Most fun job ever. You really get into the game. And something out of the Matrix something. That's right. We can sit here and talk about the Matrix all the time. We've done that plenty. We're all living in the Matrix here. You don't believe me? Well, you're missing out on the reality of life. We can go that. It's a different conversation. Hey, Andrea, you use FIBO for any FIBO? What is that? Never heard of that, Andrea. Can you share with me what that is? FIBO. Anyone know what that is? Oh, Fibonacci. FIBO. Thank you. It totally got me. No, man, that guy Fibonacci's been dead for a long time. No, he's irrelevant. I don't. I've attempted. I've played with the indicator over the years, but it never really lined up for me. I couldn't trust it, and at the time I looked at it, I think probably in 2022. I think. Yeah, I think if I remember correctly, I was functioning too fast. I didn't have the kind of patience it needed for me to use those indicators, for using Fibonacci, waiting for the retracement and all that. It didn't align with me. And after that, I didn't look at it again. So no, here I am. I don't use it. It turns out a lot of these levels and things that I draw actually line up with Fibonacci quite easily. So I'll show you this. Let's find one of these setups that we'll see. Not this one. This is not a setup. So if you look at this one, it's not too complicated. If you identify the move started up here and then it pulled back, it didn't quite pull back 50%, but probably in the 62% area. There you go. So you find your support, off you go, Fibonacci. Yeah. So a lot of these consolidations I look at kind of work out that way. Even here, if you identify the move began down here and then it pulled back about halfway, about 50%, off you go. You can use that. Yeah. How about here? The move started and pulled back. Move ended here, and then the pullback was probably about 60% in this zone. Off you go. You can use it. I mean, it makes sense. A lot of the levels I tend to draw tend to end up in a similar place anyway. So yeah, I don't bother too much. But Amal is the guy who uses it all the time. He did us a really good webinar not long ago about Fibonacci's and how he uses it on for day trading in the New York market. A very specific way. He's got 2 specific strategies he uses. I recommend check that out. A lot of people like that because it's super simple. The way he uses it, the way he's done it, it's very easy, very simple. The only hard part is having the patience. So put it on and put the alert on when it hits the fib level, then look at it. And if you're struggling with your trading and you need to simplify it, I think you should look at his webinar and see how he's doing it. I think it's very, very good. Very insightful what he's done. That's in our channel. Hope that helps. But yes, you guys know how I abused Fibonacci, right? Turned it into my own thing last year or 2 years ago. And that was fun. I redrew all the numbers. So all the lines are equidistant and throw it on the chart and boom. It's not Fibonacci anymore, it's Abinacci. Had a lot of fun with that last year. There's nothing but measured moves really. Nothing new. But it worked beautifully. But yeah, as of today, trading starts hurting my soul as I've been struggling with this for too long, but I can imagine it could be fun when making it work. At least I'm having fun here now. There you go, Tony. Very good. Yeah, I'm glad you're having fun here with us in our group because you are right when you say trading hurts your soul. I think everyone feels that way about trading. It is a very painful business. And don't let anyone fool you into again, buying signals or AI or buying courses or subscriptions, all that junk or another catchy tool. It's all rubbish because trading is complicated, as in emotionally complicated. Right? You got to really step up emotionally. But then the only way to do it, or one of the best ways to do it, is to have a good group of people you can have fun with while doing it. It alleviates the pain of trading, right? Makes it better, makes it bearable, makes it fun. You really start enjoying it. And it's not so much that trading got easier, it's just that you're doing it with good quality people. And again, that dictates your success or failure. It's all about the quality of people you keep around you. If you're in a group that's always selling you the next subscription or pushing you to renew or whatever, you're basically in a sales funnel. You're not in a group of people to trade together. You're inside a sales funnel, whether you know it or not. And that's prevalent on the internet. We know this. So it's more important, if you really want to trade, it's more important to find the right people to trade with rather than going hunting down strategies and subscriptions and whatever. I don't need that. Nobody needs that. So good. Glad you're here. Glad you're having fun. I love being in here. It's fun, even when I don't have a trade. As long as I have time to be here, I'm here. Like today. Perfect. It's a whole lot of fun. And you make some really good connections and friends along the way. Best thing in the world. Best thing you can do. Trading itself takes a long time to figure out, I don't see why you'd have to keep paying monthly to try and figure out trading. It might take 5 years for some people. You're going to pay every month to just be in a room to figure it out. That's stupid. It's a lifetime journey. It really is. And it's a journey. You never really figure it out. I don't believe I figured it out. And I've been here for a long time. It's a journey. I'm always trying to push it, trying to get bigger, better. So, no, think of it in lifetime terms. And then it works better, much better. You start thinking differently, you know, you think better. Again, you want to be in a group of people that think like this. Makes all the difference. What do we have here? This thing looks like a screenshot at the moment. I don't anticipate getting into any trades today because it's 8 p.m. now here where I am. And I'm slowly winding down for the day. There's no point in becoming alert again just to try and scalp something. It's not worth it. Let's just have a good cycle through these charts before shutting it down. So this is the MES, a whole lot of nothing for now, where it is. Q, we just looked at it, a whole lot of nothing. I'd like to see a consolidation and then a breakout, so that you could take hours and hours. Come back tomorrow and look at it. That's the Russell. Yeah, sitting there again inside of this zone. I'm not excited about it. Dow Jones. Interesting. Yeah, the breakdown, retest of the bottom there. You could think of it that way, but it's really messy. You know what? Why I think it's messy is because of this 4-hour candle. Look at this. It went all the way down, came all the way back up within 4 hours, within the candle. So there's a lot going on there. And you can see at this level, it's just messy. It's just chopping around there for the last, call it 8 hours or so. I'm not going to play with it here. So leave it alone. Oil, we looked at it. The long was down here. Didn't get into it. I'm going to blame Tony for this one today. Every day someone's going to get a blame. How about that? Play that game from now on. Should have told me this one, Tony. We got long. On a 10-tick chart. Anyways, right now it's just sitting in the middle, so nothing there. Gold, yeah, same idea as oil, but well, not really. It's like just sitting inside of this range, no room to the left. Breakout up or down whenever that happens. Then I'll look at it probably tomorrow. Silver, I don't know what to think of silver. Just let it get out of this area, up or down. Probably just upside because you can already begin to see these higher lows. Ideally, that continues for another couple of candles up to the top here, and then go. And then we catch $1 million trade from here, from 75 up to, what's the high there? 77, 79, 78. That'd be fun. No, but realistically, if you're getting long here, breakout, retest, this area of resistance makes sense. Around 76.50. That's probably where I would target. Bring that in this zone, just about there. It's a big chop zone, so around there. And crypto, Bitcoin, yeah, this was a fun one, huh? Consolidation, break, retest, but we zoomed in earlier and I saw there's no way I would enter long here. And crypto is such a, I don't know, you gotta have a lot of patience if you want to trade this thing short term. I just think it's unnecessarily volatile. Then my whole trading journey started with crypto back in 2017. I was trading every single coin out there, which weren't many at the time, but there were a few. Nowadays, nah, there's easier ways to make money than trading crypto. This thing's a mess. All right, that's that. Nothing for me to look at. There's news. Is there news, Tarek?
I'm not sure, but everything just popped up with volume. It feels like there's some news hitting the wire.
All right. Did Sheikh Mohammed say something? It's not that kind of news. Look at this 10-tick chart. Look at this mess on the S&P. Wow, so fast. Oh well. Check their tweets, guys. It's the fastest way to find out about if someone said something that would move the market. All right. Anyways, I don't see anything. I'm gonna go wind down, take it easy, find some ice cream maybe. Ooh, that sounds good. Find some ice cream. Yeah. Cool. All right, guys. Thanks for hanging out. I'll try and come back again tomorrow and do the same. Hopefully get into something. Get into a trade. Got nothing today. But yeah, take it easy. Thanks for hanging out. Talk to you all soon.
Have a
See
good
ya.
one, Avi.
Thanks. See ya.
Thanks, Evan. Have a good
Thank
day.
you.
Take care.